What is going on to the AMC stock family? In today's video, we are going to be discussing how all of this will be related to August 23rd, which is a Monday, in other words, tomorrow. Very exciting news because Citadel has apparently released news that they are going to be taking back $500 million of its cash infusion into, guess who? Melvin Capital. This includes liquidations. These includes how this will lead to margin calls for Citadel, and we are also going to be talking about the technical analysis and how the short squeeze, the mother of all short squeezes, is to come very, very soon. And I actually think that this week is going to be bullish for AMC stock. And so to let your fellow AMC investors know about all this news, make sure you guys share this video if you would like. And with that being said, let's just get straight into it. So Melvin Capital, which is a hedge fund that we are all very much aware of, had a bet on GameStop's share price. And so what exactly was this bet? That GameStop would fall. And lo and behold, they received a $2 billion infusion from Citadel after the stock skyrocketed. Ultimately and essentially, this means that they end up having a short squeeze. And so, to end up covering your position on a short squeeze, you must buy back the shares. And when you decide to buy back any equity, especially when you are selling the stock and then it decides to exponentially increase, like GameStop, honestly, that is quite sad and that is extremely hurtful to whoever is invested in you. Who is invested in Melvin Capital? Citadel is. And so Citadel had to give Melvin Capital roughly $2 billion in order for Melvin Capital to clear all of its funds. And so Melvin Capital is still roughly, I believe it is, as of right now, almost 40%, maybe even a little bit higher. I believe it actually is higher than 40% underwater. In other words, their hedge fund has not been performing the best, and so this is not good news for Citadel, simply because Citadel, as I said, is invested in Melvin Capital, and this does affect the hedge fund and how they perform in the future. Now let's just continue reading because there is a lot to discuss. So this was made on August 21st of 2021. This is very relevant news. How will this play out in the markets for this upcoming week? Well, the hedge fund Citadel pumped billions of dollars into Melvin Capital. You see this rhetoric right here, billions of dollars. This is no joke whatsoever. And so after that, the fund's bet against GameStop went bad, leading to huge losses. Now Citadel is taking some of its money back. So when people talk about Citadel and Melvin Capital, it is simply no joke. Some people think that Citadel will never have anything damaging occur and that Citadel will forever be one of these prosperous companies that just continues to flourish. But the reality is that yes, Citadel may be somewhat, to some extent, a great company. I don't work there and I don't know a lot of people that do work there, but in the previous video we actually did a review on someone that did work at Citadel and the environment was actually quite toxic. Now again, I don't work there, but let's talk more about the company's fundamentals rather than any environment or cultural aspect to it. And rather than having a lot of bias, let's just try to break it down as accurate as we can. So with Melvin Capital being associated with Citadel, I'm not sure about how much of a percentage Citadel has invested into Melvin Capital because who knows how much the percentage is. What if they only invested 5% of their hedge fund into Melvin Capital? And this would not equate to a huge loss. I know that it does say they did lose almost $2.7 billion and they are trying to retrieve the $500 million, but we still don't know how much of a percentage-wise Citadel invested into Melvin Capital. And that would give us a better understanding for how much exactly did they lose and just exactly to how much of an extent is this going to hurt Citadel. We don't know the answers to that. It's still a $2.7 billion loss. And as a matter of fact, Citadel has notified Melvin Capital of its plans to retrieve $500 million of the $2 billion it injected in late January. So again, just coming from an unbiased review, from an unbiased opinion, let's just forget about Citadel and how they did try to sell AMC stock and GameStop in high quantities. With the balance sheet and what is going on between Melvin Capital and Citadel, it is not in the best position right now. In fact, Citadel is actually trying to retrieve money, the $500 million, from Melvin Capital. And so this came from two people who briefed on the matter, and they were actually not authorized to speak publicly about it. And so under the terms of Citadel's investment, the money will be returned at the end of September, the people said, as the third quarter draws to a close. With this money flowing back until the end of September, this could actually mean one of two things. The first thing is that Citadel will have more money, and this could definitely lead to more positions for Citadel where they end up selling more AMC shares. And we're also going to be talking about how there could be another mother of all short squeeze. It is going to probably be a bullish week for AMC. We are going to get into the technical analysis in just a few minutes. And so that could be one occasion where they decide to have even more selling positions. More selling positions equals a higher short squeeze percentage. And with the high short squeeze percentage, that increases the chances and the likelihoods of another short squeeze occurring. How much of a short squeeze is this one going to be? This is going to be short squeeze 2.0. Short squeeze 2.0 right now is being paralleled to the mother of all short squeezes. People are expecting at least $100 a share. So the second thing that they will do with this money, if you look at this from an unbiased point of view, The simple fact of the matter is that right now they did lose $2 billion. I'm not sure exactly how much this means to Citadel, because to the average retail trader, this is much more than enough. But to Citadel, how much does this $2 billion really mean to them? And so if it is very damaging to the company, then I do think that Citadel will try to reinvest this money back into the company, and they'll probably keep this liquidation from Melvin Capital, because Melvin Capital, in essence, they got liquidated. They got liquidated because they must pay back $500 million. And so Citadel may just use that to strengthen their own balance sheet and to just use that money as cash on the side in case of any emergency. Because again, some people may say that losing $2 billion is an emergency in it of itself. Whereas Citadel, if they did end up getting very hurt, or in other words, damaged by what Melvin Capital ended up doing, then they may just decide to use this as cash on the side because they need to rebuild their balance sheet. And so the money will be returned at the end of September. Well, September is just right around the corner, guys. And so Citadel's plans was first reported by the Wall Street Journal. The cash infusion came in late January as Melvin was trying to have a huge turnaround in the short selling of GameStop. And so GameStop shares flatlined in recent years as it struggled to refashion itself from a brick and mortar video game retailer into a more modern e-commerce company. But wait a minute, the company's stock did skyrocket in January after new directors from Chewy.com, which sells pet products, were named as small investors piled into the stock. Melvin took huge losses as it scrambled to cover the cost of its wrong way trade and some of its other short positions, including its bet against my favorite stock as of right now, my favorite reopening play for that matter, AMC Entertainment. Now, there is more to this article, however, we don't need to discuss that. It will be invaluable to your time. So let's go ahead now and talk about the technical analysis for tomorrow, August 23rd, and let's talk more about the mother of all short squeezes. AMC stock, while it may be one of my favorite stocks, it is also very deceiving, but that's another factor that you just have to get used to with AMC, because look at this candle wick right here. This is actually why this stock is one of my favorites, because it will continuously try to prove the hedge funds wrong. We have one of the most bullish candlesticks you could have to indicate a sign of a reversal. And so right now it looks like we do have a steady increase, or in other words, a steady upside for AMC. And so this may just continue into next week, and this is what I'm actually eyeing for. I do think that the AMC bull run will continue, and I think we are getting closer and closer to signs of reversal. Don't get me wrong, there are still probably signs of market manipulation. Either that or the day traders really know when to cash out their position. And that is simply because it always has a time where a lot of investors decide to just cash out. Now, who are these investors? We know that 60% of the AMC price action is controlled by the hedge funds, because, as I just stated, a $2.7 billion loss for Citadel, that may just equate to maybe 5% of their portfolio, honestly, maybe even lower. Whereas the average retail trader, they don't just have $2.7 billion. And so we have a double wick right here at the top, which is why I really don't know who is trying to sell the stock right now. Is it the market manipulators, or is it simply the day traders? Regardless, this is going to act as our new sign of resistance. Why is this going to be the new sign of resistance? Because it used to be a support level, and not only that, we do have a 2 candle wicks. So this was around July 8th. It used to be a very solid support level, and so now it is going to flip because we did end up breaking the support level. Now it is going to be acting as our resistance. And so AMC did have, again, that candle wick right here. It indicates that there was a lot of demand. Now, the AMC retail traders, we can do much better. And I'm not talking about the AMC investors who have been continuously holding this stock. I'm talking about the investors, and more specifically, the AMC day traders, which really occurred around the June and even all the way towards the beginning of 2021. And the reason for that is because our volume just isn't there quite yet. And so volume is also one of another key indicators that I'm really eyeing out for, simply because if we don't have enough volume, this stock will not move. And I know that we can do it where we do have that previous volume, because it did happen once, and history repeats itself. If it happens once, it will happen again most often than not. Now, there is no 100% guarantee, but this is my bet right now, and this is why AMC stock is one of my favorite stocks. We were right about this when it happened with Dave & Buster's. Dave & Buster's was one of our favorite plays when it was all the way around $13 a share, and it went all the way to a high of, what was this price? $52 a share. So AMC stock has been continuously been our favorite reopening play. That's why we continuously said, no stress, AMC stock family. If it's at $15 a share, even though it dropped from 20, don't worry. If it's at even, what was this price? $5.50 when it dropped from 20, no stress. And if it's at $30 right now, just continuously buy and hold and leave it alone if that falls within your trading plan. At least that is what I'm doing with my account, because again, $30 a share, if this is going to be our solid support level, which we have been continuously at this level for a long time, if we decide to go all the way back to, let's say, 2 years ago, it was continuously hovering around $30 a share. So I don't really see necessarily a problem with it hovering around $30 a share right now. If it was already having a solid support previous years ago, 2 years ago, 3 years ago, and now it's at that same support level, why is there a lot of worry when now we actually have more investors? We have more of a movement. Back then, there was no movement. And with that being said, the mother of all short squeeze, that's what I'm really talking about in regards to the volume. If the paradigm for AMC used to be 2 years ago, 3 years ago at $30 a share, and now we have an even stronger movement, why are there still doubters that we can't have a short squeeze 2.0? Now with that being said, AMC stock family, comment down below if you think there will be another short squeeze 2.0 for AMC. And again, thanks again for watching. I'll see you guys next video.